So Bitcoin, guys, again, hammered on that 30,500 level. Again, remember that that is a psychological epic resistance level. It's the level that was the low in 2021 when we had that middle pullback before the run up to 69,000. So again, it's a major technical resistance, psychological resistance. Markets, the Bitcoin market couldn't get through it, pulled back sharply. We then did get kind of a banking crisis 2.0 yesterday with FRC collapsing quite a bit. I think it was down like 40, 50% a couple days in a row. We did see a pop in Bitcoin yesterday, but it gave it back. And that's, again, a little bit concerning why it gave it back so much. Granted, we are up today. Today, I look at it, I don't think the banking crisis is driving it today. Today seems to be a risk on. The stock market's up, NASDAQ's ripping, we got great tech earnings, everyone's feeling great, so Bitcoin's going up. So Bitcoin's in this weird phase where sometimes it goes up because there's a bank crisis, and then sometimes it goes up because there's a, risk-on environment where everyone's excited to put money to work.
Bitcoin approaches the end of April having barely moved, with BTC's price offering little short-term clues on the trajectory. Bitcoin narrowed volatility on April 30th as the weekly and monthly candle closes loomed. Hello and welcome to Money Talks. In today's video, founder and chief market strategist at InTheMoneyStocks.com and verified crypto investing, Gareth Soloway updates about Bitcoin's current market standing, the final bottom in crypto, and his outlook for Bitcoin in 2023.
So I haven't heard many details in that. I haven't heard any major reports, but it's always a possibility. The way it sold yesterday was incredible. Like the selling was just, and you could see it right here. I mean, there was some big players unloading here. I mean, it was 1, 2, 3, 4, 5, 6, 7 down candles in a row. I'm a technician. When I see 7 candles down in a row, I'm a buyer, right? That's what we call a time count in the business. And certainly it did turn out to be a good buying opportunity. I wish I held it for a little longer than I did, but that's just the nature of trading. You never sell the highs and you never really buy the lows. You just get close. Yeah, so I think you're exactly right. So number one, when we were up to this 30,500 level, we hammered on it for a bunch of days in a row. We got a doji. When you see this kind of candle here, right here, that's what we look for as a resistance, kind of a reversal signal. That did turn out to be the beginning of the decline. That was the highest point. Now, if we can get back to that level, there's no doubt that this line is somewhat weakened. So the more you hit it, think about the door analogy. If there's a door in front of me and I got to get through that door, I might ram my shoulder into it the first time, probably not going to break it down. But if I do that 3, 4, 5 times, at some point that door is going to give way. Same thought process with resistance trend lines. So as we come back up, the odds of it breaking higher are there. They're not super, super high yet, but they're increasing every time we hit it.
After unsettled price action earlier in the week, Bitcoin returned to sideways trading, with markets witnessing an eerie calm despite the potential for volatility thanks to lower weekend liquidity. As such, traders were hopeful that no unwelcome surprises would greet the candle closes. Nothing has changed, popular trader Elise summarized in part of a recent Twitter analysis of the 3-day chart. Elise eyed a potential upside target of up to $32,500 in the event of a breakout, while the loss of a key trend line below spot price would be cause to become really bearish.
So I would say this is if we can get above 30,500 being such a psychological level and we actually hold there. So for me, I would actually want to see us stay above for 5 to 7 trading days with the weekends in there and stuff and the light volume. I want to see us hold above there. If that happens, then I think at that stage, I would say the likelihood is we have a low on Bitcoin. Doesn't mean that you would go bullish there, right? You still have an extended chart. You might say, okay, well, on a pullback, now I start buying heavily, right? So that's the key, is that the mindset starts to change from shorting more heavily to buying more heavily on the pullbacks, right? So shorting the pops to buying the dips for me. So that's something I'm watching. There's no doubt about it. Definitely I'm curious, and history will tell us this, is how much did the banking crisis change the Bitcoin cycle? Did it change the Bitcoin cycle? I don't know if it did, but there's no doubt that right here, right on the charts, this is where all of a sudden we were selling off pretty sharply, and then the banking crisis happened and we started to rip up. That's right. Right here as well. Right over here, you can see how we consolidated and then broke down. So we've basically done a full circle back of this period to breakdown to going back to that area right there. And so again, that's why it's a lot of resistance. There's just a ton of people that are looking to unload into that area. There were people that were buying in here that then got crushed out of the money. They're finally being made whole. So some of them are selling their Bitcoins into it. The other thing that's kind of interesting is we still haven't seen an altcoin season, if you will, following this run. Look at the charts on Matic. Matic continues to just be so weak here. In fact, this is an interesting chart on Matic, how you have these parallel lines and you're right on support down here. If this breaks, that would be bad. As long as it holds, it could be okay. But I mean, this is a really big level on Matic. And you could look at Solana, you could look at Avalanche, you could look at Cardano, Polkadot. None of them have had runs where they've hit the highs from earlier in the year or late last year, versus Bitcoin and Ethereum actually pierced those highs. Well, I mean, listen, we know the US dollar is still the reserve currency of the world, but in 10 years, my guess is it won't be, right? A lot of people, there's been so much chatter on social media about, oh my goodness, it's going to collapse. No, it's not going to collapse overnight. You're not going to see countries like, Japan and these other countries all of a sudden just 100% dump their reserve currencies. But is it the beginning of the end? Yeah, it is. You're seeing China now trading with Argentina in digital yuan, more and more countries doing that. You're seeing, other currencies start to be traded amongst trading partners without using the US dollar. So there's no doubt that that's where we're headed. But for me, it's not like I'm a shorter term trader. It's not a trade that I'm like hopping on. I'm not like shorting the dollar because it's going to collapse to zero tomorrow. And by the way, we better hope it doesn't, because then it'll be a pile of what.
Among them was analyst Mustache, who noted support holding above key exponential moving averages, EMAs, like that which preceded major upside in previous years. Imagine being bearish on BTC even though it has been forming support above the EMA ribbon bands for several weeks. Good luck, bears.
So I think when Bitcoin matures and isn't so volatile, yes. Right now, I mean, I couldn't even imagine a country look at El Salvador, right? I mean, trying to tie your country to Bitcoin is very risky at this point. But, you look in 10 years or 20 years, yeah, I could see it being tied to Bitcoin or to another cryptocurrency. In terms of the gold standard returning, to me, it's very unlikely that major countries will, because countries, as much as we're seeing the printing of money and what it's caused, government officials don't want to lose control, right? They don't want to say, hey, we have to hold X amount of gold, and that means if we want to print this much, we have to get this. They don't want to do that. They want free reign, and that's the problem. And then, by the way, that's gotten us into the problem we're in. So again, my year-end target's about 23 to 2,400. Right now, we've had this beautiful run up, and I love the price action recently. This is bullish consolidation. It's right below this triple top area here. My guess is we start moving up. Yeah, you'll stall there, but ultimately, I think we break out. Gold to me is that perfect opportunity, right? It's if inflation stays high and the Fed has to keep interest rates high, gold is where you want to be with inflation high. If inflation collapses because the economies are collapsing, then the safety trade is gold, right? So it works on almost any angle you throw at it. So again, I do believe that gold goes up. And just to do a quick calculation, there's something called a measured move, where basically what you do here on the charts is you say, okay, this was the beginning of that bull run here. So you went from here all the way up to this high, which is about $1,000. We'll call it around $1,000. So the idea is a measured move. You take that same 1,000, and when you break above this 2075, you would essentially add 1,000 there, which gets you that 3,000 price target you're talking about. The bigger question is, how long does that take? My guess is 2024. Probably not this year, but I could see by late 2024 that is a possibility.
So what are your thoughts about Gareth Soloway's prediction? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.